Hey, good day, people. It's your boy E White, Dark Horse Investor. So I'm going over ICP, which is Internet Computer, which is a crypto. ICP has just been in a brutal downtrend. It just resembles a classic pump and dump. It looks similar to a penny stock. And typically, penny stocks dump like that is because it's not enough liquidity, not enough basically traders in the market for buying and selling. So, if any sell pressure is in high demand, it's going to just push the prices down until it finds a floor and creates enough buying pressure to come in the market to push it back up. ICP still could be a great project. They're doing a lot, great partnerships, but they were the victim of manipulation. It is believed that FTX, Sam Bankman, was involved in doing a elaborate scheme to artificially pump ICP when it was released, and through the futures market, which is derivatives. And we all know that when you over leverage, you can push markets further up than anticipated, and you can push um, assets down to its lowest point. So we have a lot of volatility in the market, and it's all because of derivatives. It's a lot of contracts that settle. It's a lot of over leveraged positions, and this caused a liquidity crisis for a lot of people to go under. Stocks do this all the time. Banks do it all the time, but they have bailouts. They have the feds. Maybe they have extended liquidity partnership with another institution that can help, bridge the gap when things get a little shaky in the market. It happens to all of them. Even the United States is over leveraged. We just happen to print more money. I'm going over these charts, and we're going to look at each one of these charts, and we're going to see why is it that there are various price points based off of ICP. And this is arbitrage as well too. So essentially what was believed is that Sam waited back a week before he found out that ICP was going to be put on Coinbase. So what he decided to do is, hey, let's create a futures product for ICP. ICP gets the green light on FTX. It is then pumped insanely, and then when the sell pressure came in, basically all the retail was left holding the bag, and that pressure was just astronomical. Look up here. This is Binance. Binance had and so here's the thing. I wanted to have FTX on here, but I guess because of what they're going through, they're not even really showing up for these particular charts. So that's that. But let's look at Binance right here. All right. So this is the high around $2,842.22 is where ICP went to during this the ICO uh, launch, basically, right? Now, what you notice is, like I said, FTX is not on here. FTX, it went to over $5,000 on their platform. So now you see the arbitrage. Why is it 5,000 over there, but on Binance it's 2,842? Look over here. This is CoinNext. Their high was 340. How? So you see, this is the reason why there needs to be interconnectivity. There needs to be a cohesive ecosystem where this arbitrage is not that huge. Okay. Typically, you're going to have arbitrage opportunities in any market that's new, but when stability comes in, those opportunities diminish. But that is a drastic jump. All right. I mean, imagine um, able to get in at a pretty decent price point before the run up, all right, and on these platforms, and then you go over here and you sell. So even right here, you want we're on a 1 day chart. This is on May 10th. All right. And over here is on May the 11th. So the next day. So even if you bought here at 340, but you transferred that over here to Binance, you was able to sell for $2,842. That's a nice little come up. That was what's happening as well too. So you have arbitrage and you have future contracts all clumped up in one, and it just destroyed this particular project. All right, down here we have Qcoin 874, $874.02. Really? I mean, this is three different prices, same time frame basically. And then over here we got Coinbase. Coinbase has a $495 and then a massive dump. So what if Coinbase also behind the scenes could have what? Taken out contracts on another platform? Possibly. We don't know. Anything can happen. So this is the manipulation that you see. That's why regulation has to come in. Now, just because regulation come in doesn't mean manipulation stops. There's hundreds of loopholes. The stock market is still manipulated to this day. It happens. But regulation is supposed to try to get better and better and better and better to try to shore up those loopholes. Those loopholes only benefit a few. It rarely benefits the masses. We're typically the victim as the majority. But am I invested in ICP? I did take back up a small position. I think that once things get back to normal, it has a potential. We should see. So this is not investment advice. It's just my opinion. All this for entertainment purposes. But what I'm trying to say is this: I would rather invest down here and then up here. And that's one of the things as retail investors we have to understand, right? We have to understand is that where is our location of price? Is it in the middle of nowhere? Is it at the extreme top? Or is it in a channel at the bottom? I would rather take my chances investing in something in a channel at the bottom than in a channel at the top. So you can take that advice with a grain of salt if you want. But that's basically it. Please subscribe, like the video. Like I said, I pump more videos out here and do a little commentaries on this, on my opinion, on some of the dynamics of the market. Y'all have a great day. Y'all make sure when you're trading, do not go crazy on your leverage. During the time of volatility, you may want to reduce. Some of you do 10x, you may want to go to 5 to 3x on any leverage products that you're doing so that you don't go on the verge of blowing your account or losing more capital than you intended to. All right, so keep that in mind. Stick straight to your rules. Do not get emotional, and we do not chase money. All right, we chase our process of what we do, and the money will come. Y'all have a great day.